everybody. Weekend Path Chat covering the FX markets and the economic calendar for the week. Pretty exciting week last week when you talk about U.S. Fed rates. The FOMC essentially, or the FOMC and the Federal Reserve, essentially had a concert of Fed speak during the week. Brainerd, Kaplan, Evans, Williams, Bullard, Fisher, Janet Yellen, all speaking last week. And save for Dudley, who's not a voting member, pretty much everyone implied that the March meeting is definitely in play. We saw the probability of a rate hike in March go from the high teens, from 17 to around 19%, all the way up to where it finished the week at 79.7%. So basically an 80% probability that they move in March. There was even some shops that moved their own rate hike estimates up to 4 hikes this year. The CME group, Fed Watch tool, is the one where we watch to check out the probability of the hike. And again, that more than tripled in a matter of a few days. That's a big market turnaround. I've been Fed watching for a long time, so has Mike. And that is a big, big, big move. Bob Icino with you, along with Mike Arnold from Path Trading Partners. Let me get into the economic calendar for the week, and then I'll turn it over to Mike for a big picture macro view of what he thinks is going to happen during the week. So Sunday, March 5th, nothing crazy coming out. We do have month-over-month Australian retail sales expected to increase by 0.4%. Previous was 0.1%. Moving on to Monday, we've got around 2:30 in the morning, 3 a.m. Chicago time, we've got Germany construction PMI and Germany retail PMI. Not huge numbers, but if they come out well above expected, that could move the markets quite a bit. Both numbers were above that critical 50 zone. That indicates growth last time they came out. 9 a.m. Chicago time on Monday, U.S. factory orders for January. Final durable goods orders for January as well, both expected to have increased by 1%. And then later, we've got the Reserve Bank of Australia's rate decision. So that's expected to remain unchanged at 150 basis points, 1.5%. We'll see if that happens. We would expect some comments out of there in the direction of getting more aggressive, similar to the U.S. Fed. The Australian Central Bank has been more aggressive than the U.S. Fed as of late. Tuesday, German factory orders coming out at 1 a.m. Chicago time. And then Eurozone GDP, fourth quarter final, the year over year, at 4 a.m. Chicago time. Factory orders in Germany is supposed to be up 4.3%. And the Eurozone gross domestic product, again, this is the fourth quarter final, is supposed to come in at 1.7%. Of course, the previous was 1.7% because this is the final revision for the fourth quarter for the Eurozone. U.S. trade balance shouldn't move the markets much at all. We've got that coming out as well. We've got the Canadian Purchasing Managers Index, 57.2 last time, considering the tear that the dollar has been on against the Canadian dollar. I think they would hope for that to come out a little bit stronger. Japanese trade balance coming out. That'll be about 6 o'clock Chicago time. It's actually technically 5:50. Japan's gross domestic product expected to come out at up 1.6%. That again is a fourth quarter final. Nominal GDP is another number that they come out with that's expected to come out at 0.5. That's a quarter over quarter. Then moving on to Wednesday, again, only covering the really important stuff. We've got China's trade balance coming out. There's no real time for that particular piece of information. The trade balance is supposed to come in at $27.5 billion. Germany's industrial production comes out. It's expected to be down 0.6. That's going to be around 1 a.m. Chicago time. Swiss Consumer Price Index. ADP employment change. That's going to be 7:15 a.m. Chicago time. That's private payrolls from ADP, which is a payroll company in the U.S. They've been releasing this number for years and years. They're expected to add 185,000 jobs on the ADP employment. This is not necessarily a perfect correlation to non-farm payrolls, but it is watched by the markets. We've got Canadian housing starts. That's also about 7:30 in the morning. You've got U.S. wholesale inventories. And then, as always, we've got the Department of Energy's crude estimates. So that'll be interesting as well. Crude's been whipping around quite a bit. We'll probably do a crude update this weekend. If not, we'll talk about it on Monday for sure. We've got China's consumer price index. That's expected to be up 1.8% as well on a year-over-year basis. So we'll see what that comes in. They also released the producer price index on the same day. Those are both going to be 7:30 p.m. Chicago time on Wednesday. The PPI won't be as important because the CPI is the number to watch, and that comes out at the same time on the same day. Thursday, Japan's machine tool orders year over year. It comes out at midnight. We've got the Swiss unemployment rate. That's supposed to be unchanged at 3.7%. We've got the European Central Bank rate decision. That's 6:45 Chicago time. That is a big deal because they also release the numbers on their asset purchase target. That's supposed to remain at 80 billion euros. That would be unchanged. The rate decision is supposed to stay. They're supposed to leave rates at 0%, which is what their target rate is. Their marginal lending facility is at 0.25 or 0.25%. That's also expected to stay unchanged. Canadian new house price index year over year comes out on Thursday, 7:30 in the morning. By the way, going back to the ECB decision, the decision will be at 6:45 a.m. and then a press conference or a comment by Mario Draghi will come about 45 minutes after that, somewhere between half an hour and 45 minutes. No real set time for that. Then we've got U.S. continuing claims and initial jobless claims. And then Friday, China's new yuan loans, big deal. They're expected to fall dramatically. Last time was 2.03 trillion yuan. It's supposed to come out at 920 billion this time. So a dramatic drop expected in new yuan loans. That's going to actually be a big deal for the FX markets. We've got UK industrial production year over year. We've got construction output for the UK. We've got trade balance for the UK. That's going to be all at 3:30 in the morning Chicago time. Then at 7:30, we've got both the Canadian net change in unemployment, the Canadian unemployment rate, and their full-time employment change, and also the U.S. non-farm payrolls numbers. U.S. non-farm payrolls is expected to be at 190,000. Unemployment rate is supposed to drop to 4.7%. Those are the estimates. All right, they'll have average hourly earnings. Now that's a big deal. They're expected to rise by 2.8%. Last was a 2.5% rise. One of the big sort of points of contention in the last non-farm payrolls number was that wages were not rising. Hourly work week is supposed to be unchanged. That's coming out as well. Referencing back to Canada, their net change in employment is supposed to be down 15.5 thousand. We'll see if that jives with the Bank of Canada's statements that their 2.1 inflation rate may be temporary. I think that's probably why they're pointing to it, because they don't see the kind of job growth, at least consistent job growth we're seeing here in the U.S. We're not seeing incredible job growth, but it has been fairly consistent. So that's pretty much it for the calendar. The Fed is now in a quiet period. They cannot comment to the media for 10 days prior to their meeting. So we're entering that quiet period before the March meeting. Keep an eye on the last stuff at the end of the week, U.S. non-farm payrolls and the average hourly earnings and work week in the U.S. to see if that could potentially change the odds of the Fed rate hike. Let me turn it over to Mike so he can show you what he's seeing on the charts.
Okay, great. Thank you, Bob. All right. Spent the last few hours updating all these charts so we could give you fresh levels and updated, proper, correct charts moving forward, which I do every so often just to make sure my levels are correct, update all the correct GAN levels, all the trend lines, and all the significant levels. So, strong rally in the euro off our significant level cluster down here, rallied up through the trend line. If we continue higher on Sunday night, Monday morning, watch for a test of the 106.30 level, followed by the 106.45, and then we have this other trend line. Then we have a cluster up here of 106.61 to 106.70. Those are your key levels higher. If we pull back, watch for a retest of the 105.84 level to the 105.77 level. That's going to be key on a pullback. The pound, on our update on Friday, we mentioned it did hit our target and take partial profits. It hit the target and reversed. So, and it went up to another GAN level at the 123.03. If we continue higher, watch for the next levels up are 123.47, where we also have a declining 8 EMA moving average at 123.54 coming in. So that's going to be key resistance and a trend line. So remember, these levels aren't hard walls, but they're levels to target because they can go through and then you can see quick reversals. Above that, the next major level higher is the 123.92. If we turn back lower, remember our full target on this double is all the way down at 121.51. But we're just recovering and we have a declining rotation zone. On a move back lower, we have a key GAN cluster right around 122.58, and then we'd retest this 175 level about 122.14, that area right in there. Yen. So we have our revised significant levels. We ran up and tested 114.66, which is significant, and then pulled back to a prior GAN level of 114.01. On a further pullback, look for it to retest this trend line and all this cluster of moving averages and a GAN level. That area is going to be right around 113.53 to 113.36, which is pretty key support. Once that key support's broken, we're looking for another pullback to about 112.47 and then to the bottom of this clear path move, which is 112.10. So those are your levels going lower. If we turn around and go back higher, watch for a test of this key defining point, 114.95, followed by 115.12. Breaking through that finally takes us to the 116.01 level. Swissy rallied up to a key GAN level 101.45, pulled back through the next target lower, 101.02. Now we're looking, if it continues lower, for a key test this GAN cluster, 100.42 to 100 about 46 in there. You also have flat moving averages, which probably won't come into play. You do have some significance right around the 100.66 level. Then we can also come into this rising trend line. On a move back higher, watch for a retest of the 101.02 level, then for a test of the 101.32, followed by a new defining point of 101.45. If that's broken on a strong rally, the next major level higher is another GAN cluster at 101.66. Aussie came down to the 200 simple moving average daily. Did not get down to our next level lower, then reversed strongly and rallied up to a key significant level and a GAN cluster at 75.92. On further rallies, we're looking for 76.17, followed by 76.41. We're starting to get a first cross rotation zone also in there, so there's going to be a fair amount of resistance up at this level. Turning back lower, watch for a 75.67 test, followed by a retest of Friday's lows at 75.42. If those are broken, then we're looking for 75.22 as a key level. CAD rallied up to our trend line, nearly to the key GAN level, 134.41, just slightly missed it. It got to a high of 134.37, pulled back and closed back below the trend line. So further weakness, 133.65 is key, and then we're going to be watching for 133.22, followed by 132.97 to 132.83, where we have a GAN level, a significant level, and a rising 8 EMA. Finally, we're adding in coverage of the Mexican peso for some of our podcast listeners and YouTube viewers of the Path Chat. Pesos down strongly on Friday, breaking through a key GAN level of 1961.3. Next level lower is 1938.83, which is a target level and a key significant level. If we continue lower, then watch for the 128.20. On a rally back up, watch for the resistance again up 1961 4.300, followed by a retest of the trend line. This is going to be a key trend line that provides resistance. If we move higher, we have a declining rotation zone and significant level right at the 19.88802 level. And then further strength will take us to the upper end of the rotation zone and another gain level at 20.09780. That's all I have for you right now, Bob. Back to you.
Thank you, Michael. Very exciting. A new Money Path podcast has been released. We'd love it if you would listen to it, review it, subscribe to it. You can find it by typing the Money Path podcast into your iTunes or Google Play search bar, or you could just go to pathtradingpartners.com and the podcast will be up on our website. Feel free to leave a comment, like this video if you find them useful, and subscribe to our YouTube channel if you haven't already. When you hit the subscribe button, a little bell will pop up. If you click that bell, you can be sure that YouTube will send you an alert to your email box when we have a new video out. These videos, as you can see, are time sensitive. Follow us on Twitter, path_trading. Like us on Facebook, Path Trading Partners. And again, if you don't want to leave a comment here, but you want to reach out to us, you can reach us at support@pathtradingpartners.com. Hope everyone's having a great weekend. Thanks for watching. We'll talk to you guys on Monday.